You know, if you've scrolled through TikTok or Instagram lately, I bet you've seen a SharkNinja product. Whether it's the Ninja Creamy making that crazy good protein ice cream or the Shark Cryo Glow that promises flawless skin, their gadgets are absolutely everywhere. They are masters of the viral hit. But that brings us to this really interesting puzzle. This company is a massive success, both culturally and commercially. So why does Wall Street seem so nervous about them? That's what we're going to unpack. And this, right here, is where things get weird. Look at the company's performance. For 10 quarters in a row, that's 2.5 years, they've had double-digit growth. But then you look at the stock, and it's actually down almost 12% over the last year. Meanwhile, the rest of the market grew over 10%. It just doesn't add up, right? Okay, so to figure this out, we've got to look at both sides of the coin. First up, let's talk about the bull case. All the reasons why this company really does look like an unstoppable powerhouse. First off, let's just talk about the growth, because it is staggering. In 2024, revenue shot up by 30%, hitting over $5.5 billion. And this wasn't just a one-off thing. They've been on this incredible hot streak of double-digit growth every single quarter for more than 2 years. So how in the world are they doing it? Well, it all comes down to their innovation engine, which is just relentless. They launch more than 25 new products every single year. They literally create new categories out of thin air, like the whole frozen treat thing with the creamy. And they've jumped from vacuums and blenders into totally different worlds like skincare and outdoor gear, all fueled by some seriously smart marketing on TikTok. And here's the thing, when they enter a market, they don't just compete, they absolutely dominate. Just look at the US air fryer market. In only 3 years, Ninja more than doubled its market share. They went from 15% to a whopping 33%. That is their playbook right there in action. And they're pulling off the same trick in places you'd never expect. Get this, less than a year after getting into the beauty game, they became the #1 brand for skincare facial devices in the entire United States. That proves their magic touch isn't just limited to the kitchen. And look, it's not just about selling a ton of stuff. They're actually getting more and more profitable with every single sale. Because of some really smart moves in their supply chain, their gross margin hit a record of over 50% last year. That means more cash in the bank for every single product they sell. Okay, so the company is a high-growth, super profitable innovation machine. What on earth could possibly be the problem? All right, let's flip the script and dive into the bear case to see what has investors so worried. The first big worry really boils down to this one financial term, consumer discretionary. SharkNinja's products are awesome, no doubt. But at the end of the day, they're wants, not needs. And when the economy gets a little shaky and people start watching their wallets, those cool new gadgets are often the very first things to get cut from the budget. And that sensitivity to the economy? It's just one piece of what analysts call the wall of worry. You've also got fierce competition. I mean, they're squeezed between super premium brands like Dyson on one end and budget-friendly options like Bissell on the other. Plus, they're exposed to risks from tariffs and global shipping chaos. And maybe the biggest risk of all, their whole model is built on launching hit after hit. A couple of duds could really throw them off. And that brings us to the bottom line. Even with today's amazing performance, the market is basically betting on a slowdown. Investors think that these incredible returns, which were up at 29%, are going to eventually cool off and fall back down to around 22% in the coming years as these risks start to play out. So you've got these two totally different stories, right? On one hand, an unstoppable innovation factory. On the other, a company facing some pretty serious economic and competitive headwinds. So where do the pros on Wall Street land on all this? Well, this chart makes it pretty darn clear. In spite of all those risks, the overwhelming majority of analysts are super optimistic. A full 67% call the stock a strong buy, and another 22% say buy. Almost nobody is on the fence. It seems the experts really believe the potential reward here outweighs the risk. And this really breaks down the whole argument perfectly. The bulls, they point to that unstoppable growth, the bigger profit margins, a pipeline that's always full of new ideas, and a killer balance sheet with zero debt. The bears, though, they keep circling back to the fact that the company's heavily reliant on the US, it's vulnerable to a recession, competition is brutal, and there's always a chance the hit-making machine could spot it. And they're not just saying buy, they're putting a real number on that optimism. The average price target from these analysts is over $139, which, based on recent prices, suggests they see a potential upside of nearly 13% in the next year if they're right. All right, so the experts are clearly betting on the company, but how exactly is SharkNinja planning to tackle those very real risks we've been talking about? Let's take a look at their game plan for the future. Their plan basically comes down to three key things. First, they're going to keep doing what they do best, launching into brand new categories, just like they did with skincare. Second, they're going to keep turning up the heat on competitors in their core markets, like vacuums. And third, and this is a big one, they are going global in a major way. And you know what? They're not just talking about it. They're already doing it. As you can see, their international sales are just exploding. And hey, remember that tariff risk we mentioned? They've already shifted over 90% of their US production out of China to get ahead of that problem. Now that is thinking ahead. And believe me, that product's pipeline is not drying up anytime soon. For 2026, they're placing some huge bets on shaking up completely new markets. We're talking outdoor heating, espresso machines, the next generation of skincare, and even AI-powered smart home gadgets. Basically, they plan to just keep creating brand new growth stories from scratch. So, it all comes back to this one big question. SharkNinja has proven time and again that it can't just make products, it can create culture. The real challenge now is whether that incredible, innovative power is strong enough to fight off those huge external forces, like the economy and intense competition. And that, right there, is the billion-dollar question that Wall Street is desperately trying to answer.